So what are the requirements for going IPO? So there are certain criteria which has to be met for going IPO. A company which plans to release its IPO or make money from IPO, they have to have net tangible assets of at least 3 crores in the last 3 years, of which not more than 50% is held in monetary assets. Means they should have maybe infrastructure and other things more than 50% of 3 crore in the last year. But there's an exemption available, like firm must have commitments to utilize excessive amount. I mean, if they have more cash than 50%, they should have made a commitment to utilize that in business in the future. The total paid up capital shall not be less than 10 crore. Means the money that they are raising from the investors using IPO should not be less than 10 crore. And the market capitalization, total valuation of the company, shall not be less than 25 crores. So that is the second criteria which should be met. Then there are several other criteria as well. So the company should be profitable, must have delivered profits in at least 3 out of the last 5 years. Um, so that is another criteria. Like if they are buying land or key parts for the business, they can get an mm, they can get an exclusion. But in the last 3 out of 5 years, they should have been profitable. They should have net worth of minimum 1 crore for the last 3 years. The total size should not exceed more than 5 times of its latest net worth. Means the size of the IPO, the total amount of money that is being raised by IPO should not exceed more than 5 times of its present net worth. And the last and sixth criteria which should be met. If the company has changed its name over the last 1 year, I mean within the last 12 months or less, if they have changed the name, then at least 50% of revenue for the last 1 year should have been gained, should have been earned after name was changed. So there are other rules and regulations as well, but these are the main ones which should be met while a company goes IPO. And there are different criteria for NSE listing and BSE listing. So in today's class, we'll be discussing the differences between capital market and money market. So it's like we are starting with the recap of the last session. So you all know what financial market is. Financial market is in which people trade financial securities or commodities. Financial securities are like stocks, bonds, debentures, and commodities are like gold or silver or um, wheat, rice. These things are called commodities. So, and in financial market, the cost of a transaction is low. It's not very high like brokerage, which used to be like 0.5% of the exit load or the entry load. So there's another thing that cost of a transaction is not very high. So securities are like stocks and bonds, and commodities, as I told, that it can be agricultural goods like wheat, rice, or pulses, or even precious metal like platinum, gold, silver, etc. So what financial markets do? Financial markets actually they um, they help with the mitigation of risk. There's always risk involved, so they try to mitigate risk. And of course, raising capital from, I mean, capital markets help raise capital. And With the help of these financial markets, like where people trade, price is regulated. So that is another thing. Transfer of liquidity, like in money markets, most of these things are done in cash. And also in forex, foreign exchange. mm, so these are currency markets. So so these are the functions. That's what happens in those financial markets. So capital market is like the stock market, as I told. And there they have I mean, there these are bonds, stocks, or debentures. In the commodity market, um, um, there's precious metal and also agricultural goods. And money markets are different, like we had discussed in the last class. Money markets, they are they are the maturity ranges anywhere between 1 day to 1 year, less than a year. So in money market, like examples are certificate of deposit, treasury bill, or even cheat funds. Those are examples of uh, trade in trade that happens in the money market. And um, money market is both organized and unorganized as well. Like something that happens through banks is organized, or which is controlled by the RBI. But there are many transactions which are not regulated, like what happens in chit funds. So so many part of money market is not regulated, and their risk is more. Like many chit fund companies um, raise money from the market, and they disappear. So that has happened a lot. So and RBI cannot regulate them. So that's a problem with the money market. We talked about derivative market, like derivative comes from the underlying. We had yesterday taken an example, like if you are going to buy, if you are just to understand what derivative is, if you are going to watch a cricket match and there's no ticket available, but suddenly your friend appears and he gives you a letter, and the letter says that you can buy the ticket by showing this letter by for 20,000 rupees. In the black market, the price goes up, and since the price has gone up, um, and no other ticket is available, but like price has gone to 23,000, and value of the ticket is still 20,000. So the letter is a derivative, and the cost of the letter will be 3,000 in that case. And if you are not able to watch the match when it starts, the value of the letter will become zero after the match. So just an example, just to understand. So there are also future markets which provide forward contracts that we talked yesterday. Forward contracts are like between two individuals. There are no intermediaries involved, and that happens for a future date. Like if you are selling cotton, and if you decide to sell that for 25,000 rupees after 25,000 rupees per quintal after 6 months. So that is an example of that is actually an example of forward. And in future there are intermediaries, and in forwards there are no intermediaries. So that is also kind of a derivative. And there are insurance markets, like the insurance that we buy. And there are foreign exchange markets, like you know, if you go to forex market, and if you want to buy dollars or sell dollars, or buy Indian rupees, sell Indian rupees, and they're at a certain percentage, they facilitate these trades. So that is an example of forex. So capital market is like two types. There's primary and secondary. So like we had discussed yesterday, the IPO, actually initial public offering, that is an example of primary market. I mean, that happens in the primary market, not the secondary, because it is directly between the company and the buyers. So, but what happens, what is bought in the primary market, and if that is sold or purchased again, that happens in the secondary market. Like if you go to a broker, and if broker facilitates that trade, so that is an example of secondary capital market. Secondary market, like as I told, whatever has already been bought in the primary market, if you want to buy or sell that again, that is an example of secondary market. So in the primary market, the trade happens between the issuers and the investors. Investors mean people who are buying it. That can be me, you, anyone. And issuer is the company which offers the IPO. And secondary market, it takes place among the investor. One person buys it, other person sells it. So investor is a term that is used usually for those people who buy and sell in large quantities. But here it is being referred to everyone. Anyone can be an investor. Any questions? As I told, that the money market is used for short-term borrowing, lending, or selling, and there the maturities can range anywhere between a day to 1 year. And even government issues treasury bills to raise money. So that is an example of things happening in the money market. And chit funds are also an example of trade that happens in the money market. People buy, sell, I mean, take loans, and that you have to repay within a year. So if the maturity is more than a year, then that is not money market. So typically that is a year or less. And here the chances of default are kind of low, because uh, within a year default can still happen, but chances are lower here as compared to the capital market. So one person is lending money, other one is giving. So that's what happens in the money market. And typically, I mean, these are several hundreds of crores. Like if government wants to uh, um, get money from the people, they issue treasury bills. So that is at least hundreds of crores, or maybe that can run into thousands of crores. A large amount of money, a transaction takes place there. And these trade that happens in the money market also determines the short-term interest rates. And the main function is to allow the government to raise funds. There are credit unions as well who issue certificate or deposit for raising funds. So that is also something that happens in the money market. Commercial paper and treasury bill, or also trade that happens in the money market. treasury bills are issued by the government, and commercial paper is issued by the company at a discount to face value and redeemed at face value. So means they give it a little bit cheaper than the face value when a commercial paper is issued. So let's look at some of the differences between the money market and capital market. So in the capital market, the maturity period is long. I mean, that is a long-term investment that can run into several years. But in the money market, the maturity can range anywhere between 1 day to less than a year. Any questions? So as we discussed that the main instruments are collateral loans, bills of exchange, and in the money market, or certificate of deposit, treasury bills. In the capital market, it's the stock, shares, debentures, bonds, securities of the government. So the credit instruments that are used in the capital market are diverse, and there can be several different type of credit instruments like stocks, bonds, debentures. But the credit instruments are not that heterogeneous in the money market. So too much diversity can create problems for the investors in the capital market. So let's talk about the institutional differences between the capital market and the money market. Non-banking players can be involved, like chit funds, but that is in the money market. But in the capital market, there are stock exchanges involved, there are commercial banks, and there are also non-bank institutions are involved. Like you must have heard of Carvey, the company that deals with stocks. So, and there are mortgage banks as well. So banks which like mortgage means if you want to buy a home, they take your home as a security and issue a loan, and they take interest from you. And commercial banks are involved in both places, and non-commercial banks are involved as well, non-banking financial institutions. So I'd like to pause here for a minute and let me know your thoughts if you have any questions. I think Manas asked a very good question yesterday, and that was regarding what are the criteria for which for issuing an IPO.
Hello, sir.
Yeah, Manas. So I answered your question in the beginning that there are several different criteria. I mean, several criteria which have to be met. At least
Yes,
six main of them, six which are most important. Like the company has to be profitable. I mean, if the company is not profitable,
Yes,
and if they are raising an IPO, if they are offering an IPO, then that is considered to be fraudulent, because if the company has no future and if they are likely to go bankrupt, then they cannot offer an IPO. And if they are if they don't have a total net worth of even 1 crore, they cannot offer an IPO. So those were the 6 main criteria. There are other criteria as well. So it is the government checks. I mean, these are the regulations from the government, because those NSE and BSE, those are regulated, and a company which is likely not to do well, I mean, which do not have a solid foundation, they cannot come up with an IPO.
Okay, sir.
So yesterday, I think you also asked about
Angel investor.
How a company approaches an angel investor, and
every step.
Let's talk a little bit about that. In India, I mean, a lot of companies have come up, but the success ratio is not that high. I mean, there are thousands of startups, but not all of them become Flipkart or Ola Cab. So some of them have gained a lot of success during the recent years, and that is because the most important thing is that if they are able to show a good revenue stream, they can easily get the seed capital from an angel investor. Like if they are doing well, and if they have a good working model, if they have a prototype already which is in place, angel investors are likely to easily invest money. But if a company is not profitable, if they do not have good revenue stream, then it is more difficult.
Okay. So sir, initially for the investor who look for investment, who wants to invest in some startup or anywhere, so initially investor, what they look, I mean, why they will invest in any particular startup or any who is looking for angel investor. So for you, if you want to be invest in somewhere, so what will be your point of view, or what will be your approach to analyze about the company, and then you will invest? What are those key points will you want to judge before investment?
Yeah, sure. So the first thing is that they should have a good revenue model, good business model, that they are able to generate revenues constantly. Other things that I look for is potential, how much potential they have going forward, whether the person who is running the company, if he is efficient, if he has good business knowledge, if he is efficient administrator or not. And so these are the key things.
Sir, will you be considered about the market sizing and the bottom line and the top line, how much they can be capable if they achieve some percentage of market of that particular product?
Yeah, so definitely. The company might be generating a lot of revenue, but they may not have good margin. So if they do not have good margin, they are not like they are burning all their cash. So that is not a good place to invest. I mean, they should have good gross margin, and if they are simply focused on expansion, take money and just expand, then they do not have very solid foundation. So that's what happened in the case of Kingfisher Airlines. I mean, Kingfisher had the backing of Vijay Mallya. It was his own company, but the problem was that they were not generating. They were generating cash also, but they did not have gross margin, and they tried to keep on expanding. They changed their business model. They started in the luxury sector. They did not stick to that. And in India, luxury for domestic airlines is not that important, because flights are short, 1 hour, 2 hours, or 2.5 hours at the most. So business class does not make much of a difference. Most of the people like to save money, and so in India, luxury sector innovation does not make much of a difference, but it was more costly. So not everyone went with Kingfisher at that time. And apart from that, they also started flying on a lot of sectors which were not so profitable. They started expanding. They look for international expansion, and internationally, aviation is very challenging, very demanding because it's very expensive and not all the players can survive. So they tried to expand everywhere. They bought Deccan, which is which was kind of cheap airlines, and so they could not send a clear signal. They sent mixed signals. Started in the luxury space, and they tried to show themselves uh, as a cheap airlines after they bought Deccan, Air Deccan. So, so means they were confused. They did not have a clear strategy. They kept changing and they kept flying on non-profitable routes. And the worst thing was that they were making money. They were making generating revenue initially, but without gross margin, the any business cannot survive. And aviation industry is very difficult uh, because fuel prices are and they have to pay so much other fees. So all in all, I mean, they made so many mistakes. And if I was an investor, I would have probably not invested in Kingfisher Airlines because they lacked those basics. Even though Vijay Mallya was a successful businessman at the time, but uh, but like he was new to the aviation sector. He did not have any experience there, and he lacked a strategy. So initially, I mean, he had enough funds, but later he could not get the funds and he could not run the business efficiently. Eventually, went bankrupt. So this is one of the things. If we are talking about angel investor, we should not be comparing that to Kingfisher because Kingfisher was a big company and it was already backed up by United Breweries, which was UB. So that is not a fair comparison. I mean, so angel investors typically start means they invest in very small companies, startups, and the investment size is very small. So, but if I have to make a decision, then I'll look for profitability, and also you have to look for what new value they are offering. I mean, what is their business model, how they are generating revenue, and if they are offering anything new. Like Ola Cab was a cab aggregator. I mean, they do not run taxis on their own. I mean, they contact different people and they are the ones, taxi drivers, who Ola is basically a software, um, like a technology oriented company. So they are offering the technology and they have brought in so many people together. But there are questions about those type of uh, businesses as well because uh, until the last year, I heard that they were not making a lot of profits.
Yes, sir.
Yeah, they were not making profit; they were running into losses. But they managed to get so much money, not from. I mean, angel investors were funded them in the beginning, but they made so much money from Series C, D, and E investments from venture capitalists. And
Yes, sir.
international investors put in so much money that overnight it is valued at several $billion. So the question is whether this model is sustainable or not. But looks like it is sustainable. Eventually, they can be profitable because they are not having too much competition. They are having some competition from Uber, but I think that's it. So that model is slightly questionable the because the question remains there's a doubt whether eventually they'll be able to make money or not because they are giving discounts and they are trying to add in a lot of people. They're expanding very fast, and these venture capitalists like to exit at some point. They do not want to own the company for a long time. They like to invest, and when the company grows in valuation, like if it grows manyfold, venture capitalists might uh, decide to exit. They might sell the company to someone else, or the company might offer an IPO. So their strategy is not long term. And people who come up with private equity, which is very large investment, they typically uh, buy 50% to 100%. I mean, they do not look for immediate exit, but venture capitalists have a different strategy. And now there's a largest hotel chain called Oyo Rooms. I mean, there also I heard that they are simply burning the cash which they got from venture capitalists, and because giving so much discount, giving cheaper rooms uh, comes at a cost. They have bought those rooms in bulk from the hotels, and the discount they are offering is from the money that they generated from the venture capitalists. But it's too early to say. I mean, there's a possibility because there's something called Airbnb in United States, and they work on the same model and they have copied that model. So other thing I'd like to mention about Indian startups is that they like to see what's happening globally, especially in the United States, and they copy those things. So like when they saw Uber, they made Ola. They saw Amazon and they made Flipkart and Snapdeal. They saw Airbnb, they made Oyo rooms. So frankly speaking, I also come from India, but I do not see much innovation happening there. They try to copy whatever is happening in United States, especially, and they try to replicate it there. So I know you guys are also, most of you, must be thinking of starting your own venture at some point. So my advice is that try to do something original, try to come up with some innovation, some novelty. Do not try to blindly copy, because these companies, Flipkart, Snapdeal, or even Ola Cabs, their founders have sold most of their stakes. So they don't have that much stake left, and they have made money, no doubt, but not so much, not like people who started Alibaba. So Jack Ma, who started Alibaba, he has more than $40 billion because he did not sell all of his stake to raise money. So in the company, if you start a company, try to try not to sell all of the stake. You have to sell some of the stake to generate money, but try not to do not to sell everything. If you do that, you'll not be able to become. You'll not be able to found a company like Amazon or Alibaba in the future. You guys are probably budding entrepreneurs, so that's my advice to you. Try to do something original, and there's not so much innovation and novelty happening in India.
Right, sir. Sir, my next question is about digitalization. Sir, how do you think digitalization does impact in financial market?
Today, almost everything has become digital. In the olden days, when people did not rely so much on computers, um, it was not there, but now almost everything is digitalized. So,
yes, sir.
If you want to buy a share, you just have to log on the computer and you can do it from there. So everything is digital these days. So the impact is it has definitely helped people. It is for the better. For which you have to go to the stock exchange. You can do that online from the computer. So, and I don't think of any stock exchange where things are not digital. It's digital everywhere these days. So I'd also like to tell, like, the stock market depends on sentiments. A lot of factors, like if company is profitable, obviously the stocks will go up, and if the company is not so profitable, it will be struggling. But apart from that, it depends on company's policies and economic conditions, and also public sentiments. So years back, I hear in news whenever there's a big change in the stock market, ups and downs, it mostly depends on some news. Like suppose there's a rumor that not rumor, but there's a news that there's a possibility of India-Pakistan war. Then that can cause the stock market to crash, because people will fear that if war indeed happens, that will cause a lot of damages, and in that case, people like to sell their stocks. Anticipating damages, stock prices will fall down, and when they start selling, prices go down further. So way back in 1987, there was a day when there was no such news, but still there was a big crash all over the world. So those type of situations are rare, but that also happens. So can any of you tell me what is P by E ratio?
So can you repeat the question?
Yeah, do you know what is P by E ratio?
E.
I mean, if you people are exposed to financial world, you should be knowing what P by E ratio is. Anyone? P by E ratio tells you the measure that current share price relative to per share earning. So, like per share earning means how much money has been generated per share, and its current price of the company. If the P by E ratio is less, it is called price earning ratio. If P by E ratio is less, that is considered to be good. Anyways, moving forward, so did you people go through the reading material? I mean, I'd strongly recommend you to go through that before you do your midterm paper, because you need to have some sort of insight. Otherwise, without reading, I haven't given a lot. They're just 3 PDFs, so take your time and go through that. So, talking about the differences between money market and capital market. So, money market just provides short-term credits, and capital market provides long-term credits to industrialists. And money market, like people need money for running their everyday business. That is, and if they want to raise money, they take it from the money market, not from the capital market. The amount of risk is smaller in the money market because within 1 year the chances of default is less. But in the capital market, the maturity takes place within several years. So risk is higher in the capital market because suppose the company offers an IPO, people buy hoping that they'll make a lot of money after 5 years from now. And what happens if the company goes out of business? So the risk involved is higher in the capital market. In the money market, the basic rule is just to get liquidity, means cash adjustment, and capital market is long term. So here the basic idea is to invest and to make money, to uh, make profit out of the investment. So the basic rules are different. So the relation of the central bank does not have that much influence on the capital market. It does have some sort of influence, but not. It it's not fully regulated by the, like if you talk about BSE or NSE, they are not so much regulated by the RBI, but the money market is, mm, I mean, at least the organized sector. I'm not talking about the unorganized sector. So the organized sector is closely monitored by the RBI, so they have more reference. So I think we have come to the conclusion of this topic. It was a short topic, a difference between the capital market and money market. Let me know if you have any questions. I will post some more questions in the forum. Try to answer that. I'm not giving something which is very straightforward this time. I'll give something for which you have to research. So I'll appreciate your responses, and the more questions you attempt, you generate more interest and you learn more. So today I'll try to post some questions in the forum, and you have time to respond to that before the next class, which will happen on the next Sunday.
Sir.
Yeah.
Sir, I want to know about cryptocurrency. I mean, I hear about Bitcoin and many others cryptocurrency. Can you give me a brief about cryptocurrency, what it is, and how it's increase value, and how people can invest?
Yeah, actually, the algorithm which determines the values of these currencies is not known to many people, and many people do not consider it to be a very good investment, because since the algorithm is not known, and these are like digital currencies people have on their laptops, so that there's also possibility that the identity can get stolen. And recently I've heard that there have been so many frauds, people have lost so much money. So since the algorithm is not well known, I would never advise anyone to invest in any of these unless the price is very small, or if you have a lot of money to spare. And in my opinion, I feel that these are slightly dubious kind of investment, where there are a lot of people invest. They try to generate a sentiment that this is a very good type of investment, and investors buy. I mean, once a stock, if you talk about Bitcoin, it used to be costing 1 penny in 2008 when it started, and today it's costing several $1,000s, and it has seen so many ups and downs this year itself. So people who start this type of currencies, they try to manipulate the value by getting investment, by generating sentiments, and there happens to be a time when people feel that there's going to be a crash. They start withdrawing, they start selling, and prices go down. And the challenge that if you invest in these type of currencies, and if prices start going down, and you may not find a buyer at that time, so you might be in trouble. So why take so much risk? I mean, if you're I will never advise any of you to buy Bitcoins, because it costs so much money at this point. So, and there are no guarantees. Any investment in which you see 15%, 20%, 25% crash or gain on daily basis or even weekly basis, that is not considered to be a good investment option. So if you want to invest in something, invest in stocks or mutual funds, which are safer. I will strongly advise mutual fund, because risk is lower, and the portfolio has so many stocks, and it is managed by professionals, mutual fund managers. So the risk is not that high. So I will prefer that if you want to uh, go to investment, start small, start safe, do not take so much risk. And it is also true that people have made so much fortune from the stock market, but the thing which makes them so formidable is they have studied so much, they have invested so much, they have so much experience. I'm talking about people like Warren Buffett. So he has been doing it since he was 11 years old. And the more you do, more you gain experience. But if you want to do something like cryptocurrency, I will not advise.
Right, sir. Sir, I also heard about something called Demat account. So, can you tell me what is Demat account? I mean, look, sir, we are initially just started our job, and if we are start to invest somewhere, and like mutual fund or Demat account in share market. I mean, I am interested in investing in share market or something, mutual fund or like this type of fund. So, can you tell me how can I invest somewhere?
Yeah, Demat is nothing but dematerialized account in which you do not keep money, but you have stocks, shares, these things. Demat, nothing special. I mean, you keep your stocks, mutual funds, those things in the Demat account. So there's no material, but there's only stock, and you can buy and sell from there. I mean, if you want to do it online, you need to have a Demat account. And it's not difficult, it's very easy. You can go to a bank which offers Demat accounts, and you can open one. So, and it's very easy to do transactions from there. Buying and selling is very easy. We talked about digitalization. So, I mean, it is nothing but digitalization of stocks. I mean, the digitalization of the capital market. That's what Demat accounts are. Demat is nothing but dematerialized.
Okay. Okay, sir. Thank you.
Okay, one thing I'd like to share, one information that India is supposed to be an economy of $5 trillion, means 5,000 billion dollars by 2025. So it is currently the fastest growing large economy in the world. So we are we will be $5 trillion economy by 2025, in about 7 years from now. And by 2045, means in 27 years from now, India is expected to surpass even USA. So we are likely to be ahead of the United States. Can't talk about China because China has slowed down a little. But here, US is a matured and developed economy. Here, the growth rate is not that high. So here it is between 2% and 3%. In Europe, it is like 1% or less. And in India, we are like 6-7%, so which is considered to be very good. And we are likely to go ahead of USA by 2045. So people think that in India there are challenges. I mean, not that great lifestyle, but the biggest strength of India is it has a lot of potential. We have so much human resources, and the economy is doing well. Fastest growing economy in the world right now. So you people have a lot of opportunities there. If you want to start your own company, I mean, dream big. I will advise you guys, dream big, aim big. And if you cannot do something immediately, try to do something later. But India is the right place. And in India, startups, not all of them become big. All of them do not make it big. But the survival rate of the startups is higher than the United States. Because here you have to spend more to get human resources, to get the infrastructure. You have to spend more in the United States. But in India, you don't have to spend that much. And India's growth rate is higher. So that is the right place. And all you have to do is to dream big and make efforts at some point. I know it may not be possible for you to do it immediately. And it's not for everyone. I mean, if you don't want to do it, I mean, doing a job is a good option. But if you want to make it big, think of raising your own company.
Right, sir. Thank you, sir.
So I'm not saying that you should do it. I mean, if you feel like it, think about it. If it is your passion, and you have to be very passionate. It's not easy. It is difficult because if you're not passionate about it, at some point you're likely to give up. And you should have some very good idea, very original idea. Don't try to copy others. Like if you try to do Facebook again, no one will come to you. You'll find it difficult to get an angel investor. But recently I heard that Mahindra is offering Indian entrepreneurs to start something like Facebook. I'll not suggest, because if you start get into the rat race which everyone else is doing, there's no point. If you should have something original, something innovative, which creates a lot of value and which solves other problems, then you're likely to be more successful. So, and let me tell you one more thing: people who are the smartest are not the most successful ones all the time. Like even average people, Jack Ma, who has created Alibaba, he tells that he was an average person, but he went on to found a company and he has made more than $40 billion out of it. So you should have a big vision and try to connect with someone who can maybe mentor you. And one more thing I'd like to tell you: try to associate with successful people, not with everyone, because if you try to seek everyone's advice, people will uh, just give you their opinion. And if you try to seek advice from successful people, they are likely to give you the best advice. So do not listen to everyone. Take advice and try to share with people who you consider to be good, to be really good. Like there's a saying that you are the average of the network of 5 people you normally meet. So try to associate only with good people who you can look up to, and who you consider to be smarter than you. Try to associate with them. Try to get their ideas. So I've been doing a lot of talking, and I'd like to hear from you people. I've given my email. Send me an email if you have any questions related to science, at least related to this class, and answer the question or forum. Go through the reading material. Yeah, and also try to do the assignment, the first assignment. I'm not saying that do it before the next class, but try to complete the first assignment. It is a multiple choice, so it should not be difficult. And the next assignment is going to be a little more challenging. So try to complete the first one whenever you get a chance. In the next class, we'll also talk about the assignment. So I think uh, that's all for now, unless you have some more questions. If you don't have any other questions, then I think I'll end the call now. So thank you everyone.